What if Nvidia's recent $2 billion investment isn't just a deal, but, a defensive shield against the biggest threat the company has ever faced? What if Google's TPUs and Broadcom's partnership with Google can actually take away Nvidia's AI dominance? And here's the real question. Is Nvidia partnering with Synopsys because it wants to, or because it has to? If Nvidia is facing competitive pressure from every direction, what does this partnership really mean for the future of AI hardware? Let's break down the truth behind Nvidia's sudden move, the good, the bad, and the unknown. Before we continue, no matter where you're watching from, if you want deep, fact-based tech documentaries, make sure to subscribe. Now let's continue. Nvidia stock has been under pressure for weeks. A 14% slide, rising competition, and whispers on Wall Street that Google's custom AI chips could break Nvidia's dominance. But suddenly on Monday, everything flipped. Nvidia revealed a massive $2 billion investment into Synopsys, the world's largest chip design software company. The moment this news hit, Nvidia stock jumped 1.7%. CEO Jensen Huang came out confidently, telling CNBC, "This is going to expand the market of computing into the world of design and engineering for the first time." But behind his calm voice, Wall Street started asking, is this partnership a sign of strength or a sign of fear? Synopsys isn't just another company. They are the brain behind the chip industry. Their software designs, CPUs, GPUs, AI accelerators, custom data center chips. If Nvidia controls both, 1, the chips, and 2, the tools used to design those chips, then Nvidia gains influence much deeper than hardware orders. This deal gives Nvidia early access to new chip design tools, faster AI chip development, deeper integration between Nvidia GPUs and design software, and something more subtle, strategic dominance over how chips are designed globally. But here's where it gets interesting. Right now, Google is aggressively pushing its tensor processing units, TPUs, developed with Broadcom. And under certain workloads, they're cheaper and faster than Nvidia GPUs. This is not a small threat. Some investors believe it's the biggest threat Nvidia has ever seen. And when Broadcom stock fell 4.2% right after Nvidia announced the Synopsys deal, the message was clear. Wall Street sees this partnership as Nvidia's counterattack. Jay Goldberg from Seaport Research, one of those rare analysts with a sell rating on Nvidia, dropped a bombshell research note. He claims Nvidia is facing rising competition, using aggressive sales mechanisms, investing in customers to ensure demand, and hiding the scale of these moves in financials. He points out Nvidia has already spent $6 billion buying stakes in private companies and committed $17 billion more. And get this, an upcoming OpenAI agreement may involve $100 billion in equipment. He basically suggests Nvidia is using investments to create future GPU demand. Some call it smart strategy, others call it risky. But here's the good side, and it's huge. By buying into Synopsys, Nvidia gains, first, direct influence over the tools used to design AI chips. Second, faster time to market for next-gen GPUs. Third, optimization that only Nvidia will have access to. And fourth, a deeper moat against custom chips from Google, Amazon, and Meta. Think about it. If Synopsys tools become optimized for Nvidia GPUs, every AI startup and hardware company will gravitate toward Nvidia-friendly designs. This is long-term strategic warfare. Goldberg isn't wrong about one thing. Competition is rising faster than ever. Google has TPUs, Amazon has Trainium and Inferentia, Meta is building its own AI chips, and Microsoft is entering with Maya AI chips. Over in China, Baidu, Huawei, and Alibaba are all racing ahead. For the first time, the AI chip market is truly competitive. Nvidia dominated early on. But honestly, the next 2 years may decide the entire industry's future. This Synopsys deal is a signal. Nvidia is preparing for a world where its dominance is no longer guaranteed. Here's the part most investors are missing. Synopsys doesn't just design consumer chips. They design defense chips, automotive chips, industrial AI chips, robotics processors, and secure, mission-critical silicon. Nvidia wants to move past GPUs. They want to expand into every sector where AI lives. By partnering with Synopsys, Nvidia enters aerospace, engineering, industrial design, and automotive chip design. Think Tesla, Mercedes, BYD, and Chinese EVs. This isn't just a GPU strategy. This is honestly an empire strategy. So what is this? A power move? Or a warning sign? Some investors see this as Nvidia preparing for the AI decade, expanding control over chip design, building deeper software integration, strengthening its moat, and entering engineering markets. But skeptics say Nvidia is using money to influence demand. Competition will accelerate. Google TPUs pose real risk, and Nvidia may be masking pressure behind big deals. Which side is right? Nobody knows. And that's what makes the next 12 months so crucial. So tell me, is Nvidia's $2 billion Synopsys deal a masterstroke that will cement its leadership for the next decade? Or is it Nvidia's quiet admission that competition is catching up faster than expected? Comment below. I really want to know what you think. And if you want more deep documentary-style breakdowns like this, subscribe.